Welcome back, and joining me for a closer look at what's played out on the market scene today is Kearabilwe Nonyana from Scope Prime Africa. Thank you so much for your time, Kearabilwe. It's very interesting to see that the JSE is in green territory, and so are the European markets, except for the US markets, where we did have the US consumer inflation print coming out. Was it that bad, that hotter than expected print?
Yeah, no, I think they're struggling with taming inflation. Looking at where they expect inflation to be and where it is right now, you're seeing literally things like house price growth and in terms of rentals, which are coming in stronger, which are pushing that number up. But I think what's more concerning is core inflation.
Yeah.
Because core inflation is a bit more stabilized. That's where you're starting to see a straightening out of some of those numbers. So for core inflation to remain resolute at where it is right now, I think is a bit of a concern for for Jerome Powell at the moment. And in some of his comments yesterday, it really has shown that right now they have no handle on inflation as we speak.
It's quite interesting because, I mean, it would seem that Jerome Powell's comments are valid considering what we got today. But before that consumer inflation print came out, Trump was still saying that I need interest rates lowered. Are we still going to see this tension between the president and Fed Chair Jerome Powell?
You know, when two elephants fight, it's only the grass that cries. And really speaking, at the moment, it's there. And looking at some of the comments from some economists from Oxford, they were speaking that the tariffs are being used as a way to negotiate with their trade partners. But the way that Jerome Powell is seeing it is that they could see retaliatory tariffs on American goods, which is really not going to fight against inflation. And funny enough, Zinati, Donald Trump was one of the biggest proponents of bringing inflation down during his political campaign. And right now, the way he's moving is, I don't believe, is going to be deflationary at all. It might just really make it a lot more inflationary for US consumers. And really that does not bode well for that economy, even though it's doing very well.
It's going to be a bumpy ride. Let's check in on a deal that was of quite, keen interest that investors had on that deal, Alibaba and Apple. We did see, of course, Alibaba shares surging today after the announcement that of its partnership with Apple, where Apple will be using Alibaba's AI products for Chinese consumer. Quite interesting that they started off with a partnership with Baidu, but seeming that did not work out. Just talk to me about where this places Alibaba in that tech competitive landscape.
I think in valuation-wise, it is coming in at a very strong valuations. It's right now sitting at about 24 PE. But I think in terms of reach into the Chinese economy, I think Alibaba proposes a greater prospect for Apple than Baidu does. And I really think they have been able to bet down a lot of these partnerships going into the past. But one thing that I do give credit for the Chinese economy is making sure that any American company comes in with a Chinese partner. And I really think that's how the Communist Party has really designed it. Great for Apple, great for Alibaba, but I think right now it's better for Alibaba because it gives them more access to more consumers and better margins for them as well.
Right. Before we come back to the JSE, I quickly want to go to Europe. Heineken, the Dutch beer maker there, posting their results today, beating on profit forecasts, also implementing a share buyback program. Interestingly enough, I did see AB InBev shares also ticking up there, seeming that they caught some of that buying activity. Just looking at Heineken's cheers-worthy performance, just shed some light on that.
You know, back when I started my career when South African Breweries, SAB Miller was still alive, I think they had the strategy of premiumizing brands, especially in emerging markets. And how you're able to premiumize brands is make them more affluent, move from brown bottles to green bottles. And that's how you premiumize brands. And SAB was one of the best that ever did it in terms of their style. And Heineken has just jumped on that. Heineken is currently one, it's the second largest brewer, but right now I think they have done better than AB InBev, where AB InBev wants to take big brands and find ways to be more efficient by cutting costs. But Heineken has done a lot of spending on premiumizing their brands, and they're seeing that value being accrued to shareholders right now. And right now, it's really trading at a high multiple of 42, which tells you the quality of the business. But what I can tell you, Zinati, it had the best trading day since 1983.
What?
So it really tells you what a great performance Heineken really had today. And I think it will remain as quite the benchmark for that strategy. And I think it's always a good buy. But right now, it's very heavily priced.
Yeah, we'll also see how it filters through to Rimgrowers. I do understand that Rimgrow does have some exposure to that company. But also, I must say, I still love my brown bottles as well, Kearabilwe. Let's go to Pan African Resources that released its interim results today. Yeah, quite interesting how the markets reacted, considering they did come out with a trading statement earlier on this week, and the stock took a knock even then. So I'm quite surprised that the share slumped as much as 9%, even though they did guide that profits would be down. So, of course, we did have a dip in gold production, also higher costs, and then we did see headline earnings per share slumping there by almost 44%. How disappointing were these numbers?
I think the market expected the disappointment, even though it overreacted. I think what really shocked the market has been the production guidance in terms of them not necessarily getting things right. I mean, if you had to juxtapose this share price chart with with bigger miners, this has the highest correlation to the gold price, and the gold price sits at all-time highs as we sit. If you literally had to pull up a chart of Pan African Resources, one straight line up, and truly speaking, to be that heavily geared towards the share price, you have to get everything right, looking at the age and the cost profile of the mines that they have. They currently have one of the first mines in South Africa, the Barberton mine. And for you to be mining that deep, you need to get things right, because your all-in cost of production remains very high, and you need to take advantage of that. But I think what we could have taken from the results, which were great, is the fact that they are knocking down debt, and they are looking at introducing dividends in the upcoming year if the current gold price persists. And looking at the inflationary, at the U.S. inflation, and as well as where interest rates are going to go in the U.S., you would anticipate that the gold price will remain at these elevated levels. So it bodes well for Pan African Resources. It's just too small for some people.
All right. Well, let's take a look at another thing that, in your view, is shiny. Your stock pick for today.
Yeah, this is more of a trade idea more than it is a stock pick. It's Barloworld. I saw a reports came out that ISS as well as Lewis came out saying that the current deal that's proposed with the Saudi Arabians it should be taken at 120 rand a share. I mean, it really is coming up from about 60 odd bucks from last year, and it's really from when the deal was around, that was a cash premium that I believe was worth it for shareholders. So my trade idea, more than a stock pick today, is take some Barloworld and hope to take advantage of that premium.
And sometimes you actually need to involve yourself in short-term trading. Thank you so much for your time, Kearabilwe. Really appreciate it. That was Kearabilwe Nonyana from Scope Prime Africa.